Welcome to Talk Tickers, your go-to for breaking down the most important earnings calls.
Hey there.
Today, we're diving into Salesforce's Q2 fiscal year 2026 results. Quite a bit to unpack here, especially around their big vision, the agentic enterprise.
Absolutely. It was certainly a pivotal quarter. We saw strong financial beats, definitely. But then there was this sort of cautious market reaction afterwards.
Right, that divergence is interesting.
Yeah, we need to look at that and what management actually said about the future of AI, SaaS, all of it.
Okay, so we'll get into the numbers, the big strategic moves, that market sentiment, and give you the essential insights from the call. Let's get right into it. So first off, the results snapshot. Salesforce delivered a pretty robust Q2 FY26.
They did.
We saw non-GAAP EPS of $2.91. That handily beat the consensus estimates. And revenue, that came in at $10.24 billion, also above expectations, growing 10% year over year.
Yeah, and what's particularly noteworthy, I think, is the operating margin expansion continuing. That's, what, the 10th consecutive quarter they've improved that?
Yeah, 10 quarters, yeah.
Which is pretty remarkable. And their data cloud and AI ARR, that surged up 120% year over year, hitting over $1.2 billion now.
Sounds impressive on paper, right? But like you said, the market's initial reaction was, well, a bit different. Despite these strong beats, the stock actually dipped noticeably in after-hours trading right after the announcement.
Yeah, that's the puzzle.
We'll explore why that might be in our deep dive. Okay, let's unpack this a bit more, beyond the headlines.
Okay.
Salesforce reported GAAP EPS of $1.96. That's up quite a bit from $1.47 year over year. And that non-GAAP operating margin, you mentioned it, hit 34.3%, an impressive 60 basis point improvement.
Right. And crucially, their current remaining performance obligation, or CRPO, that reached $29.4 billion, it grew 11% year over year.
So that's future revenue locked in.
Exactly. It indicates solid future revenue from existing contracts. It actually came in better than anticipated. Seems like due to some strong sales execution.
And what about cash? Q2 free cash flow was $605 million. Year-to-date operating cash flow, pretty hefty at $7.22 billion. And here's where, the capital allocation gets really interesting. The board approved a massive $20 billion expansion to their share buyback authorization.
Yeah, huge number.
Brings the total to $50 billion. And they also paid out $399 million in dividends.
Look, that $50 billion buyback authorization is a massive signal of confidence from management. It suggests they think the stock's undervalued, and it provides a pretty significant potential floor.
Right. Confidence in their future cash flow, too.
Definitely. And it ties into their big strategic push.
Which is this agentic enterprise vision. Let's talk about that.
Yeah, this is the core of management's message, especially from Marc Benioff. It's Salesforce's vision, where AI agents aren't just like tools. They work alongside humans, fundamentally changing business structures, business processes.
So not just automation, but transformation.
Exactly. Benioff called it the real manifestation of what AI was meant to be. He's talking about a complete reinvention of how companies operate.
And this vision is powered by Agentforce. The numbers here look pretty good, too. Over 12,500 deals in, 3 quarters?
3 quarters since launch, yeah. And over 6,000 of those are paid deals already.
And we're seeing customers move from pilot to production, a 60% increase quarter over quarter. Plus, 40% of new bookings came from existing customers expanding their use. That suggests it's sticking, right?
Absolutely. That move from pilot to paid and the expansion from existing customers, those are really strong signals. And they made it easier to adopt, too. Flexible payment options, pay-as-you-go, flex credits.
Oh, right. Flex credits.
Yeah, those accounted for 80% of Agentforce's new bookings in Q2, which naturally raises the question, how are customers actually using this stuff?
Great question. And they shared some pretty compelling examples on the call.
Good.
Like DirecTV saved their billing reps nearly 300 hours. One AI agent apparently executed 50,000 actions in just a week. PenFed, they're projecting millions in annual savings using it for loan underwriting. Under Armour doubled their case deflection rate, boosted customer satisfaction, all in under 60 days.
That's fast impact.
Yeah. Reddit cut resolution times from almost 9 minutes down to 1.4 minutes.
Huge difference.
Falabella increased NPS by 10 points, dropped call volume 25% with a simple, "Where is my order?" agent. They actually tripled their Agentforce business after that.
See, that shows the expansion potential once they see results.
And Williams-Sonoma started with 1 brand, rolled out to 8. They even built a custom sous chef agent.
A sous chef agent. Okay. So these examples show real, tangible benefits across different industries. And the foundation for all of this, the bedrock, is Data Cloud. Management called it the heart and soul of agent success.
Right. The data piece is crucial for AI.
Absolutely essential. It provides the data, the metadata, the context that these AI agents need to actually be accurate and effective.
Right.
Salesforce is basically saying every AI transformation is a data transformation. Without properly managed data, the AI just won't work well. It'll fail.
And this is Data Cloud. It's not some future thing. It's already a substantial business. Over $7 billion, they said.
Yeah, exceeding $7 billion. With 140% year-over-year customer growth, over half the Fortune 500 are apparently using it now.
And the pending Informatica acquisition, that fits right in here. It's about $8 billion expected to close Q4 or maybe early FY27. That's meant to really harden this data layer, right? Form their AI foundation with MuleSoft.
Precisely. It's about strengthening that data integration and management capability, which is critical for making the AI vision work at scale. They gave the FedEx example too.
Oh yeah, FedEx.
Use Data Cloud to unify data across different platforms, result a double-digit increase in contract signings and significant projected savings. It just underlines that point. Good data enables good AI outcomes.
Makes sense. And they're not just focusing on existing customers, they're also expanding their market reach pretty aggressively. They finalized a fast pass agreement with the U.S. Army that allows for rapid deployment, and they got FedRAMP High certification.
Which is a big deal for the public sector.
Right. Opens the door to bring Agentforce into government agencies, a huge potential market.
And there's a completely new product initiative too, launching next month, the Agentic IT Service Platform.
Agentic ITSM, that's a new area for them.
Totally new application area. It's built Agent first and Slack first, so it lives right where employees already work in Slack. The goal seems to be democratizing ITSM, making it simpler for Slack's huge customer base.
Interesting move. They also talked about their 5-segment strategy still working well, especially in small and mid-market businesses.
Yeah, SMB seems to be a real bright spot. Benioff made this comment about AI making every entrepreneur a super entrepreneur.
All right, speeding things up.
Exactly.
Yeah.
Leading to faster growth in that segment, shorter sales cycles, more create and close deals where they find and close the deal quickly.
And they're using this stuff internally too, right? Customer zero.
Yeah, they always emphasize that. Salesforce uses its own tech first. Their support agents handled 1.4 million customer conversations with a 77% resolution rate. Sales agents are qualifying prospects. It demonstrates the model works internally before they push it externally.
Okay, so strong results, big vision, good customer traction. Which brings us to the guidance, the part that seemed to spook the market.
Right, the outlook.
For Q3 FY26, revenue projected $10.24 to $10.29 billion. That's about 8-9% year-over-year growth. Current RPO growth expected slightly over 10%.
And yeah, that Q3 revenue guidance was definitely seen as light or tepid by Wall Street. It wasn't the acceleration some were hoping for, perhaps.
But they did raise the low end of their full-year FY26 revenue guidance slightly to $41.3 billion.
Correct. And they also raised their full-year non-GAAP operating margin guidance to 34.1% and operating cash flow growth expectations to 13%, potentially nearly $15 billion in OCF for the year.
So profitability and cash flow outlook actually improved for the full year.
Exactly. Which is why management, especially Benioff, pushed back a bit. He called the Q3 guidance appropriately conservative. They maintained optimism about FY26 being a record year for operating cash flow.
And they stuck to the message that agentic enterprise is the extension of SaaS, not its replacement.
Right. They argued companies trying to build all this AI themselves often fail, hence the need for their integrated platform.
So what's next then? How do they bridge this gap between their confidence and the market's caution?
All eyes are on Dreamforce, their big annual conference, October 14th, 16th. That's positioned as the major catalyst.
We should expect product news.
Definitely. Agentforce version 4, the launch of that agentic IT service platform, and crucially, a lot of customer success stories. They mentioned leaders like Dell, FedEx, Williams-Sonoma will be there showcasing results. That's where they need to provide the proof points.
Okay, so pulling this all together, what's the investor context here? We've got strong Q2 beats, this ambitious vision, but the market's reaction is cautious, a real divergence.
Precisely. The stock dropped right after the call. It boiled down to two main things. That perceived light Q3 sales outlook and broader concerns about slower than expected AI monetization.
So investors see the potential in data cloud and AI. The growth is there, but they want to see it translate faster into top-line revenue acceleration.
Exactly. It's that classic show me the money moment for AI. The underlying metrics are moving, but the overall revenue guidance didn't reflect a big immediate acceleration.
And you look at the stock performance year to date, down about 23% for Salesforce, while the tech software ETF, IGV, is up significantly over the past year.
Yeah, that underperformance is stark. It highlights these company-specific concerns around the timing and scale of AI revenue contribution.
The red flag seems to be that top-line growth cadence until the AI really starts paying off at scale.
Right. Management says they're investing heavily in sales capacity, especially in that strong mid-market segment. And the pipeline looks good. But the market wants proof that the consumption model and Agentforce adoption will drive significant revenue soon. It's about the timing.
And Benioff also talked about a deeper shift, right? That this agentic enterprise needs a change in company structure, not just tech.
Yeah, that was interesting. He emphasized it requires a radical shift, which explains some internal restructuring and why they focus so much on change management with customers like Adecco or Schneider. They're not just selling software. They're trying to help companies rewire themselves.
Which is a much bigger undertaking.
It is. So those upcoming catalysts are absolutely crucial. Dreamforce needs to deliver not just cool tech demos, but a clear story on how and when this AI translates to faster revenue. Updates on Informatica closing, continued buybacks, those will also be watched closely.
Okay, makes sense. All right, it's time for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea straight from the hedge fund playbook.
Okay, let's have some fun. Given this whole situation, the market's skepticism on AI monetization versus Salesforce's internal excitement, strong underlying growth in data cloud and Agentforce. Here's an idea.
Lay it on us.
How about a contrarian long play on Salesforce using call options? The stock's been beaten down this year, trading at a discount, partly because of this tepid guidance and perceived slow AI payoff.
Okay, so betting against the current sentiment. What makes it outrageous and plausible?
The outrageous part is betting that Dreamforce will be a much bigger catalyst than the market currently expects. We're anticipating a wave of agentic product news Agentforce v4, that ITSM platform, plus a barrage of tangible customer proof points that fundamentally shifts how investors view the speed of AI revenue acceleration.
So you're betting the narrative flips at Dreamforce.
Exactly. Buy call options that expire after Dreamforce, maybe late November, December contracts. You're targeting an upside re-rating, hoping the stock moves back towards, maybe even above, its recent highs.
And the plausible angle.
The plausible part is that markets often do overreact to short-term guidance and underestimate long-term strategic shifts, especially big ones like AI. Plus, that massive $50 billion buyback authorization provides a pretty strong downside cushion. It signals management's own conviction. So you have a potential catalyst, a valuation cushion, and a narrative that might be overly pessimistic right now.
Okay, an outrageous but plausible contrarian bet on Dreamforce shifting the AI narrative for Salesforce. Got it. All right, that's our deep dive into Salesforce's Q2 FY26 earnings. We've seen a company with solid financials and incredibly ambitious vision for this agentic enterprise, fueled by AI and data cloud.
Yep. But the market's still cautious. Watching closely for that near-term revenue acceleration from all these innovations, Dreamforce is really shaping up to be critical for bridging that perception gap.
So the big question for you, our listener, to think about is this. How quickly will the market actually reconcile Salesforce's bold long-term vision for the agentic enterprise with its more cautious near-term guidance? And maybe more importantly, what specific proof points will it take for investors to really refill the tank on the CRM AI story?
Something to chew on. Thanks for joining us on Talk Tickers. We always appreciate you tuning in. As always, keep doing your own research, form your own conclusions.
We'll be back soon with another earnings call summary. Until then, stay informed and keep those tickers talking.